So thank you all the panelists for giving us reflection for points raised. So for the interest of time, I will give a chance for question and answer session for the audience. So we'll pick up some questions from the audience and we will start by giving first round chance for 5 persons to raise questions and comments. Please, for the interest of time, you're allowed only 2 minutes to present your opinions or questions. And you should state your name at the same time to whom your question is reflected or forwarded to. So you can proceed. So Ato Tedros, you can take the first chance.
Thank you. Considering the 2 minutes, I will directly go to my question. My question is addressed to Mr. Hassane. It is about insurance pricing. Insurance pricing, or in its other name, rating, it is, it is because it was considered separately. But insurance pricing is an integral part of risk management. When we say risk management, we are talking about the capital requirements, and also the pricing. I think in Ethiopia, the rate is maybe it is at the time of the emperor time. But, rating or pricing should be done continuously as it is a risk management. So, for example, in other countries like European Union, the risk management is addressed in a name known as Solvency II. Solvency II because the banks have Basel II. So Solvency II, it is a regulation adopted by the European Union to harmonize and improve prudential framework for insurers within the European Union. And substantially, it concerns the amount of capital that insurance companies with operations within that region must hold considering their risk profile. So, the regulator has put solvency capital requirement, and each insurance company should establish also minimum capital requirement. So, we see all these things, the rating and the risk we are accepting, it must be seen in light of our capital, our minimum capital. So, what they do is, if one insurance company goes out of its minimum capital, then the supervisors will interfere and, forcefully, and sometimes potentially actions include forced liquidation and of the portfolio, and they will be forced also to run off and so on. So, this pricing is taken, as a hard thing in Ethiopia, but we must develop actuaries even in our companies, and it is a continuous work that we have to adopt. So, I think if we fix, our risk management philosophy, then I think we can manage it. Otherwise, we are carrying more than our minimum capital or more than our solvency required capital. So I want you to reflect on this one. Thank you.
Thank you. My name is Salloh from Bran Insurance. If foreign insurance companies are coming, the local companies must be prepared. Regarding this, would a merger be an option for insurance companies? Yesterday, there was a lot of talk about mergers of banks, and we heard that it is inevitable. So out of some 30 banks, there might be only 5. We heard that yesterday. But I think it is very difficult for banks to merge because they have totally different backgrounds. It's something like mixing water with oil. So my point is now, if merger is an option for insurance companies, it will be also difficult because the insurance companies have similar backgrounds like the banks. So what would be the chemistry to mix water with oil is my question. This is for Ato Netzanet and Ato Balai. The next question is actually the unfair competition environment we are in. Even the minimum price is cut by some black ships. So if you don't control them, and if you don't have a solution for that, others will follow and will cut further, which will endanger the existence of the companies actually. So what would be the solution here? Thank you.
Thank you, Mr. Chairman. My name is Girma. I'm from the health sector. We have been operating a chain of hospitals and medical centers, and we are new entrant. Sorry, we are new entrant into the industry, if all goes well. So really what Mr. Markos has presented is really impressive, and we see innovation transforming the industry, and with the support of the AI as well. So my point is, are you designing around the customer need? Because if you look at the customer here, there are challenges in addressing existing demand of customers. Especially we are from the health sector and we know what is there. And on the other end, there is a need to create demand, demand creation for the insurance. So I think, are you shaping it around there? That's something I wanted to know. And definitely your products will really solve majority of the issues which you have mentioned with regard to the insurer as well as the industry. So that is the clarity I wanted to know from your side. My second is to Mr. Netzanet, the chairperson of the association. Yes, the insurance industry is underdeveloped in general, but if you look at the health, life and health insurance, it's much more, we better say it's much more rudimentary compared to the demand that's existing. So property is actually quite far ahead than health, which is really paradoxical if you compare it to what's happening in other part of the world, while the health insurance and medical insurance is the biggest and the property is lower. So it's really paradoxical. So my question is, where is the challenge? Is it because of the regulatory framework that is not helping this segment to thrive? Or is it a problem with the market players? And what is the association doing just to bring it to the where the rest of the world is? Third question is to Mr. Hassane. As we see, it is actually property leading, while the health is actually very underdeveloped. So is this the normal evolution of the insurance system from the practices in other parts of the world, be it in Africa. Are we an exception, or is it actually the usual course of evolution? And if that is the case, what would be your advice to scale this the health and the life insurance aspect? Thank you.
Thank you. My name is Samuel from Ethio. My question is for Mr. Hassane. What is the ideal level of retention versus ceded premiums in direct insurance companies and the reinsurance companies, if you know? And the other issue I do have for Mr. Balai, I have seen that in India opens insurance industry to foreigners in August 2000, and with FDI of 26% only. That is, they allow a merger only, and they increase this FDI to 49% on 2016. Can't we apply this in our country too? Thank you. Pardon? Huh?
Thank you very much. This is Tsegaye from Global Insurance Company. I would like to appreciate the organizers and the panelists what you delivered to us, and including the presenters. My questions, I don't know whether it is classified into questions or comment, but in one or other way, I would like to say something about digitalization, automation, and technology. So, as you know, digitalization is mandatory. Automation is mandatory to the business, for the business success. But we heard much about the importance from the fourth or the third East African Financial Summit up to now. We heard much, and we accept, we realize its importance. But nowadays, we want to discuss about the challenges, what we face today. When we come to the insurance industry, most software developers are coming from the outside, mostly from Indians. Still, our expertise are not reached to the level to develop insurance software. So we are obliged to recruit, make a procurement from this foreign expertise. That requires much US dollar, so it becomes the real challenge of the current insurance sectors in all aspects. Not only this, the hardware requires high foreign currency. So although digitalization, automation is important and vital, the challenges we are facing makes this process too much difficult. So when we discuss about automations, the challenge should be addressed, and the policymakers should note some notes, and the methods to help us should be designed. Our industry leaders should collide. We have to make collaborations and design appropriate RFP, which can be generally used as a national bank requirement, and we can provide this RFP to the internal Ethiopians software designers, and we can create appropriate software design, and we can reduce the US dollars, the required US dollars. So much challenges are available here, and much work has to be done in our industry, and the policy and the recommendation should be forwarded to the supervisory authority as a supporter. It will support to get some kind of foreign currency. So the challenges should be addressed, and if the National Bank or have something to say on this issue, please welcome. Thank you very much.
So for the interest of time, I will give the chance for the panelists to reflect on the questions raised. So please, Mr. Balai, you can start responding to the questions.
Thank you. I'll respond to some of the questions which refers to the NB. The first one is about merger. Is merger imminent? It depends where we stand. And about the strengths and many things of our company. Actually, even in our directive about raising the capital to 500 million, we have indicated that if a company fails to reach to that capital threshold, there are certain measures to be taken, and one of the alternatives stated was merging with another insurance company. So without going into the detail of the merger, I don't know, it's difficult even to label companies as some of them are water and some of them are oil. In the first place, who is to blame for this issue? Is it not the shareholders, the investors, who design how they establish their companies? Some on ethnic line, some on religious line. So who is going to blame for that? Because we are swayed by the political environment. But money has no religion, money has no ethnicity, money has no country. So after the fact, I don't think it would be, we can find any solution for that, but if merger becomes mandatory to survive and to stay in the business, it would be good to consider internally and start to discuss to whom we are ready to align with. So the driving point should be who are the people, where do they come from? That is not an issue at this point. It's only the business strategy, the capital, or any other business consideration that should be taken in the event of merger. Merger could be voluntary or otherwise. So this is one of the points. Yes, pricing, one of the issues that makes pricing the only potent tool for competition is because the jacket is one and the same. So for similar products, you can only compete on the price, unless they are different in their scope and in the service, in the way we deliver service. So it's natural, and most of our clients are individual or private retail. We are in the retail business, and one of the factors which people took into account in the procurement decision is pricing. So it's difficult, and we have to act. There is also an internal control for that. How many of us pay due attention to the pricing issue? Because pricing requires data, knowledge, expertise to coin. So we haven't done, actually there is a huge problem, deficit in our data. So without having the data, the system and the talent in our companies, what we did was we took EIC's rate chart and we adjust up and down, and most of the time downwards. That is how we do pricing. So we have to invest in people and systems. And the other one is about the modality of opening the finance sector. Actually, the issue of foreign direct investment is under process, under discussion. There are different modalities, branch, subsidiaries, or joint venture. There are different options. So I hope the right choice of modalities and phased-up approach would be coined in the process. And now it is under discussion with different parties. I think we are not the first countries. Hopefully, we are one of the last countries to open up the financial sector. There are lots of lessons to draw from, and that would be done. I can't comment because I'm not in charge of allowing foreign exchange, but rightly, as you mentioned, yes, we are forced to issue a directive about automation of core businesses because the market was not willing to do so in the past 30 years. So anticipation of the opening up of the sector, we issued that directive, and finally at the 11th hour, there was a question about foreign exchange, expertise, and things like that. Yes, I understand personally the difficulty even to put together the terms of reference for procurement. So it's important not to much depend on our internal capacity. It's important to acquire the expertise of local IT companies or technology companies so that they can assist us in the procurement process as consultant. So this is what I can say. Thank you.
Thank you, Mr. Bella. So, Mr. Hassane, could you please reflect on the question raised to you?
Okay. Thank you very much, the moderator. And thank you very much for my dean. I 100% agree with you. Insurance pricing even should not become a debate when you have really solvency regulation. Because insurance itself is risk management. It's part of the 4 techniques of risk management: risk retention, risk transfer, risk avoidance, and I forgot the 4th one. Insurance is just risk transfer. You are a business owner, you have your factory. You make your internal enterprise risk management. What you cannot manage, you transfer to a specialist and you pay him a small premium. That is insurance. But how many risks are in the factory that are not insurable? But the MD or the owner of the factory manage them under his retention. I 100% agree with you. So, but the problem here in Africa, except South Africa, you don't have this kind of regulatory environment. This is why you see we are talking about minimum rate, all those. It's just something that we can do before we reach the European standard. Because if we don't do anything as well, we are going to close our... But I 100% agree with you. In South Africa, you cannot talk about minimum rate. It's an open market. But they have a regulatory, I forgot the name, they have a regulatory environment on the capital issue. And the regulator is here to enforce, to control on quarterly basis in South Africa. Here, our neighbor, which is Kenya, they removed the minimum rate in 15, they bring to the risk-based capital, but till now, they couldn't implement. It's a big problem. If not, I 100% agree with you. Thank you. Coming to the unfair competition, if there is no control on the minimum rate, undercutting over will follow. What will be the solution here? This is where we are talking about where there is no solvency environment, like what we are doing today in Tanzania, Kenya, Uganda. The association agree on a minimum rate with the support of the regulator. That one in the Insurance Act, you take Kenya, you take Tanzania, you take Uganda, they have sanction. Anyone who didn't comply will be sanctioned. And I think after a certain violation, if you violate 2 or 3 times, they can even withdraw your license. So there are sanctions in the Insurance Act. I share just the minimum rate, but I have those Insurance Act. They have a clause where people that violate this minimum rate will be sanctioned. But let's be very frank, like they did mention, if the regulator can bring this solvency environment or risk-based capital environment, we'll not talk about this minimum rate. Because the risk that you can accept definitely is depend on your capital at that time. If you want to expose your capital, that's your concern, it's okay. But if you burn your fingers 1 time, 2, 3 times, or the MD that did the misunderwriting, the board putting out, the next game the board putting out, the news will spread in the market. Everybody knows that it is not allowed. All those things we are talking, it's just really an alternative before we reach really the good standard. Even because of anti-competition, it is not fair. Because the guy who is doing very good profit, loss ratio is almost nil. The guy is doing 20% loss ratio, the same rate. It is not correct. It's when the loss ratio reaches 100% that we try to increase. No. But really, if you are in the solvency environment, you just need to base on your capital, and it's fine, it's okay. Everybody is fine. That one you will see, the big insurer and the smaller insurer are not at the same level. But with the minimum rate, you are big, you are small, the same, which is unfair. But today, really, if we remove really this solvency, before we reach there, the country where we have this minimum rate, your neighboring countries, in the Insurance Act, there is a clause of non-violation. If you violate, there are sanctions for it. The other one is to the doctor. He said that the property is much higher compared to health and life. And what is the advice to increase health and life sector? You know, doctor, you are a medical doctor first. So when the patient comes to see you, you need to understand the cause of the disease before you make a prescription. So here also is the same. We need to detect the cause, why. Population, if you look at Kenya, medical is far the biggest, far, compared to all the other classes combined cannot reach medical. So we need to, for Kenya, we need to diagnose the causes and now make really the treatment. But definitely, from the experience, really, we Africa, because the chance we have, we cover the whole Africa, and the chances where really the medical and the life are low, you have first the regulatory environment. Secondly, you have religious issues. Some religious think that life insurance is not normal, is against your faith. And also you have really the, what do you call them, the product should need the expectation of the client. Because even you have the regulatory environment, the population want to take insurance. If you don't bring a product that will fit their need, we will not go for it. And secondly, also, is like doing mention, the risk perception. Why I'm going to take a motor insurance where I never got accident in my life? I don't see the need for me to take it. But if I saw my neighbor take it, he breathes, his car catch fire, he broke his legs, he lost all his family in accident. When now the insurance come to support him, definitely I will value the insurance. Though this risk perception is very, very important. So we need really to diagnostic what is happening in Kenya and bring out really the correct treatment to it. Yeah. I think there is the last one. What is the ideal level of retention? This is from my colleague of Ethio. Is a percentage of the premium or a percentage of the capital? So the exact percentage, I will get my book, I will give it to you, and my underwriting guideline as well, is a percentage of the written premium or a percentage of the capital. Yeah, thank you.
Thank you very much, Mr. Hassane, and Dr. Zanat, you can continue.
Yeah, thank you. I want to add a few words from question from Salo regarding the minimum price already set, but still there is an undercutting from that minimum price. Surprisingly, there are companies which prefer penalty rather than losing the business. It is surprising. We had a discussion in our association board. There are some insurance companies which we pin out doing such things. So I want to tip the regulator, I don't know what action to be taken. I think the penalty is 25,000 per car, maybe, yeah. There was an underwriting of having some 350,000 or 300,000 premium. So most of insurance companies set a premium with the minimum rate, and the one insurance company undercut. The premium, minimum premium was 350,000, I think, and then that insurance company quoted 300,000. So the net inflow of that premium is 275,000, so 25,000 is penalty. So we are in this practice, I think, a challenge. So I agree fully with what Mr. Tedros and Mr. Hassane said. The risk-based capital is very important. Unless we tied our hands with their capital requirement, it's very difficult. Setting the minimum premium itself will really bring the culture. But collaboration is still good, and we are trying to make a collaboration in our association to bring the manner of this good practice to association. Still we are trying, but there are insurance companies, those doing this malpractice. And Dr. Grima said why health and life insurance is going down from time to time as compared to the non-life business. Actually, I can say that the premium for health insurance, I think, increasing, but the life insurance premium is decreasing from time to time. The reason behind this low production is our life insurance is not that much attractive. You know, in our neighboring countries, they have a flexibility on their life insurance, especially related to their pension and the PF, to invest with those life insurance linked with investment. But when it comes to our practice, especially the dormantes, if you buy 100,000 coverage today, after 10 years, what you get is 100,000. In real term, that could be maybe 50,000 or 40,000. But at the early stage, you have a protection is very high, savings very low, it's good. But the more time goes, the maturity or to the due date, your value of money will definitely reduce. We have some kind of insurance like annuity endowment, which have some interests which allow you to get it at the end of the maturity. But almost those life insurance are now, they are not in practice because of the investment we earn from the investment of our funds. I think the policy support is very important for the growth of the life insurance. As I mentioned earlier, mortgage insurance is not mandatory for bankers. Then the property is, having insurance for the property is mandatory, but the breadwinner doesn't have insurance. In some insurance companies or in some bankers, they do, but in most of bankers which borrow money for the especially house holders, did not link it with the insurance. The challenge of technology mentioned by my colleague Tsegaye is really, it's a challenge, but it's a question of survival. Unless we withhold some dividends from our shareholders and invest on technology, we can't continue. As he said, foreign currency is a challenge. We need assistance from National Bank of Ethiopia to give us priority on these foreign currency issues. So it is a challenge, but we have to strive. Otherwise, we will be kicked out of the market unless we implement automation and then go to digitalization. So we need to formulate strategy. We need to find a way of implementing, for example, InsurTech, MKTY. If, maybe they can bring some kind of solution. How can we, simple technologies which are easily be implemented in the country, and also they can bring us, like FSCD said, they can assist the market or the industry in using very competent technologies which actually very expensive from if we import from India or Europe, whatever, but we have to find a platform in our industry where can we get such kind of services, at least in attractive price. So with the challenge of this technology, we have to stand together and find a solution. Thank you.
Thank you very much.
Thank you, Abraham, and the audience for your questions. To address the first question from Togirma, you know, it's important to create the demand and understand, you know, medical insurance is less in priority when it comes to the individuals, and it's mostly organizations who take that up. But that's a big market, and because of the risk and it's not mandated, maybe other reasons as well, that is decreasing, as Hassane has mentioned. Now, if you've seen, you know, the last slide on the connected insurance, even though I've mentioned auto insurance as our first priority, but home insurance and health are the next real, you know, case studies for, you know, automation. Now, in terms of, you know, health insurance, to make it even more viable for, you know, insurers to promote it, you know, partnership, let's say with a well popular and, you know, trusted hospital like Yanet Hospital, if you merge forces and then sell the insurance at the hospital itself, because now medical care, medicines are very expensive and out of reach for majority, but that is a huge market. Now, there are technologies like IoT, like I've mentioned in my first slide, pedometer. You know, everybody has a mobile phone, and you can gauge if that person is really exercising. So, Mr. Insurer can say, I can take a risk with this one, and we can be profitable if this, you know, client is doing a physical exercise. You can put an ecosystem, let's say Life Fitness coming into play. Wellness center provides wellness food and everything. So, you know, everybody will be a winner, and the medical insurance can even go lower. So you can even have these wearables nowadays to tell you the heartbeat and other, you know, critical situation of a person. So you can even do a proactive approach to deliver medical services. So the solution we provide is an open, if you've seen an API is available, and smaller insurtech companies can come into our platform and assist, insurance companies to provide a more innovative solution for, making medical insurance more viable. So it's a very interesting question, and our insurance in a box will be to address that, and we'll have to discuss with the insurers on that. The other thing I think which I would like to address is the question from Mr. Tababa in regards to software development and having to having the local resources to perform and provide those services. As the current requirements where insurers have to have well-established applications and core systems, the preparation, the investments available in our market may not be adequate enough for now. But this is something that we need to achieve. We need to own these solutions, do from the ground up. But for now, what I've been seeing, most banks have not been developing core banking, and core insurance may be it is a bigger system. Having a tried and tested solution, but then innovate around it, like Abel had from FSD earlier mentioned, you can have a medical plugin, okay? So, connected, user-based insurance as we are proposing. It's a plugin that integrates with the core system. So those kind of things can be done most likely with our local in-house resources, with fintechs in Ethiopia. So I think having a baseline of a stable core system is good, because the market is opening up. You need to compete with the global insurers maybe in a few years down the line. So we need to be more innovative. And I'm 100% sure, insurers in Ethiopia are very innovative, and the only thing that you guys have been missing is the tools. So with companies like us, Insurance in a Box, we're bringing that up, and obviously fintechs and all of us can collaboratively, even like hospitals like Yanet Hospital, different car dealership, it's limitless, and things will definitely improve. I'm optimistic. Thank you very much.
Okay, I think we're done. Okay, this is the only chance that I give, because one of my roles is just keeping the time as well. We have run out of time. So, Getinesh, you can proceed, please.
Okay, thank you for giving me the chance, even though we are out of time. The question raised by Dr. Girma has really interested me to raise this question. And my question goes to Ato Netzanet. When we say property insurance, let it be, building, car, machineries, always we are obliged to evaluate them according to the market price. Usually, when you take vehicles, because of the spare parts, inflation, because of the devaluation, always we tell to our customers to raise the price so that there will be no inadequacy of cover. Even in the machinery, in the engineering insurance also, we consider the replacement cost. So we tell the client so that he will take it or rather leave it by his own choice. So at the time of claim, there will not be a dispute. Now, when it comes to life insurance, the reason for one of the hindrance, for the growth of life insurance, especially when it comes to endowment, is because of the inadequacy of the sum insured, which now for mostly NGOs or the so-called ZAHFs are the ones who are prepared to buy this policy. But during the maturity period, they are going only to have that amount we have insured now. It will be 2 million or 3 million, but by the time of the maturity period, well, that amount may goes down to 500,000. So why don't we tackle, a solution or a breakthrough in order, as we are considering the market price, for the machineries and and the vehicles and the buildings, for instance. Why don't we, try to connect it with, for example, US dollar? Let's say 2 million birr now as a semi-insured, which is equivalent, let's say, if you multiply it with 60 birr, and at the time of the maturity period, we are going to pay, according to the US dollar exchange. We have to find a way, not simply say that, people are not aware of buying insurance or there are problems, but rather than dwell on the problem, let's find a breakthrough in the way so that we can accommodate the public at large who can pay, a premium, and also to, enlarge the, the insurance premium. I think that is my suggestion. Thank you.
Thank you, Waziri Gitenesh. The problem is, where do I pay you? Where do I bring that money to pay you? Unless I invest that money and earn return from that investment. The investment is limited in our country, especially. We are expected to hold much cash from our admitted asset. Still, it requires investment from the insurance companies to pay back. Actually, we do increment from time to time based on the need of the insured. Every year, maybe every 2 years, there is an increment. We calculate payback interest, and then we increase the sum insured based on the requirement of the client. The issue is, if there is no any requirement from any request from the insured to increase the sum insured, again, the sum insured you bought 10 years before will not have a value at the time of maturity. So in order to make the investment or the endowment policy have value, we have to anticipate. When we anticipate attractive interest or bonus, I have to also schedule or plan where can I collect that money and pay you back. The issue is we look into the investment we are engaging in, and also even the insurance is a law of large number. We have to expand the market. At least we should be able to pay the interest from, or the value of the amount expected from the insured to pay from the fund. In dollar, as you suggested, still it's a challenge because of the valuation. This year, exchange rate is 57.8 something like, but after 10 years could be 100%. This could be a challenge for the company unless they invest and should plan to earn that amount of money which can address its future needs when the maturity comes. So it needs huge investment on the life side to get that. Even in some countries, as I mentioned earlier, for example, the pension scheme, even you discuss with the insurance company and the plan your investment. Even sometimes insurance company give you a chance to opt which investment you like. So you share the investment return you get from that life insurance fund. Otherwise, the risk will be insurance companies to meet the future needs. So I think we have to change the philosophy of the life insurance we are handling now. Thank you.
Thank you, Mr. Zanet. As you all know, insurance is a very vast topic, and also the points of discussion raised for this morning are many in number and wide in scope. So we can't finish discussing all the issues in this half-day session. Even if we spend the remaining afternoon, we may not finish the whole points that we need to discuss on the issues. So as a takeaway from our discussion this morning, from both the presentation and discussion, I think regarding the independent regulatory authority, as to the vision, it aspires to have independence. Independence from undue influence, both from the government and also the market players. As to expectation from the sector, fairness, transparency, and support for the industry. Regarding opening up of the market, it seems not yet clear. As to timing, there is no specific time given for it. And as to preparation, there is no special preparation being done so far. So, as a market trend, we should expect that it would be opened. We have to make ourselves ready. As to advise what to do on both cases, we are told that the most adaptive to challenge and to change can survive. So it is up to industry players to make them relevant for the time to come. So we have to work hard to strengthen ourselves, to sanitize our market, and do what is expected of us as industry players. As to pricing, again, we have to be conscious enough to charge the risk commensurate premium. Otherwise, it counts on the existence of our industry, who will challenge the policy buyers by not paying their claims, and also will challenge our investors by not giving their expected return on the investment. We have to consider a number of factors that are affecting the price aspect of our business. One is professionalism in our underwriting practice. The other is we have to be also conscious on what's going on around our investments. A good example from what I read in the recently published sector review, particularly on the finance sector review, the banking sector is highly challenged by operational and market risk. As you all know, we have an investment, big investment in these banks, and also we deposit a large amount of money in these banks. There are likely contagion risks that are coming from this sector as well. So we have to be conscious to look around. Surprisingly, the insurance sector is reported to be resilient and stable. The issue is, does it continue to be so? Sustainability is an issue. So we have to check what we are doing. The other issue is we have said so many things about the malpractices in the market. We are the players. We have to refrain from the unwarranted price-based competition because there are other parameters of competing in the market. One is innovation, which we have been discussing this morning. Again, we have to be conscious and thoughtful on what we are saying and doing because such kind of malpractices will call stringent regulation. So it's a way that we act and operate that protect and sanitize our market. With this, I think we wind up and close our day session. Let's call it a day. Let's celebrate our presenters for their kind preparation and also a very insightful presentation and feedback on the questions raised. Please give them.
Thank you very much.
A special thanks for you as an audience for your active participation and patience, waiting this long to attend this program. The industry is very, very critical for the country as well. We can't talk any sector of the economy disregarding insurance. So to play our role, we have to be professionals, we have to be behaving as we are required. And anytime when there are opportunities, we should contribute our level best to bring the picture up. I thank you very much.
Thank you very much, Ato Abraham. Please join your panelists for a quick picture.
Okay. So I think the regulators will also take care of the points raised. Solvency II is a very important controlling mechanism because risk-adjusted premium is always required in our underwriting. Otherwise, if you're not doing that, we'll not be able to underwrite the kind of class of business that's affecting the performance. So with this, let's finish. And for those of you, part of the industry, probably as a motivator, as an information, SIP is organizing and reorganizing itself to come with a very energetic approach. Thank you for the support of the industry players, especially the CEO of companies operating in the market. We are planning to have a session that is the usual workshop. As you know, SIP used to conduct 2 workshops every year and to publish a vision called journal that is reflecting what is discussed. So this will continue as of the coming June. So you'll be expected to participate as members and also as audience for the workshop. With this, I will finish my assignment. Thank you for the opportunity.
Thank you, Mr. Abraham. A round of applause for Mr. Abraham.